Target Trading Academy.
Good afternoon, everybody. Preston Vogl here at Target Trading Academy with today's Micros Market Recap. Let's get right into it. It is February 1st. It is Wednesday, just at the close of New York, 4:05 p.m. Eastern. We've been closed in oil for a while, but what a day. We had the FOMC news come out today, which is always a good roller coaster ride to watch and participate. Not right at the news, but get that volatility to go with the market movers there. But with that said, oil, we pretty much opened right at the close, had a little bit run up to it, and then we continued going to it, and they just got smacked down. And they had a little bit of a recovery, hitting those opening values, and then sellers stepped in again, and they just drove it down once more. So only really two potential opportunities that really set up for our students in oil. But it is finishing that down for the day. As far as gold goes, you can just see the response at news. Gold had quite a bit going on with it in terms of where we opened. We did open gap up from that close that was just right there. Had a run down to it, hit that edge, and then we were painting fences at this level, and they kept bleeding through a little bit, ultimately breaking through right here. And then getting close to that HVA edge, but no, close is not, it's not good enough. Turned around and then had responded off of that level there. And then news came out. And by that time, gold was already closed. It closed right here, right where it responded. But people were trading the evening session or the post market. And they went with the news, and it just drove it up. But we did close technically in gold net down. It looks like we'll most likely, if they continue with that trend, we might be opening gap up tomorrow, but we'll see. As far as our equities go, wowza. This morning, the first 30 minutes or so, they were pretty decent because we did have some news. I should probably say first hour at most. We did have some news which gave some volatility in the market. It wasn't as slow as it can be usually on an FOMC, but we had response at that level there once, twice. They finally blew through it. Before the news, they had response there. So that's 1, 2. After that news, that's risky to trade, but that's 3, 4. Already within that first hour or so, there's 4 potential opportunities. Again, these levels are drawn out the night before the next day's trading activity for our students so that they had plenty of time to get them on their charts and ready to go. But you can see from that time on, pretty much that hour to the FOMC, it was pretty dead. And then when that FOMC came out, you can see just boom, and they took it back and then ran it back down, and it's just the volatility is nuts. I'm always smiling, and I just can't help but laugh how volatile it is. It's just crazy. And if you're getting involved with that right away, you clearly do not know not to do that. You need to let that pan out. Don't trade news and let it bleed out, and then go in for the finishing kill with your moves. And ideally, you have education behind you to tell you with that instruction what you're looking for in this scenario. But they came back up, hit that edge 1, 2, 3 times. So that's 7 total potential opportunities there. Finally, they got momentum. Those sellers did to come down. They hit that edge, and it got smacked hard. And it bounced once, twice. And on that second one, it just kept pretty much climbing. You did get response back down at that HVA. Plenty of opportunity and participation right after that news. So it was a good injection of lifeblood. And ultimately, they drove it up. And by they, I'm talking about those market makers. They drove it up and gave great response on the way up for those levels. You can just see here 1, 2, 3 potential entries. Again, I say potential entries because it is up to the student to execute. We are a trading education company. We teach our students our methodology, and ideally that is going with, those market movers. But it's just like the big banks out there. They've got all the money. If you think that it's the little guys changing the markets and turning it around, you're wrong. It doesn't matter how many little guys get together. You do not have enough money to compete against those big institutions. And in fact, they want you to think you can, and that's where the speculative trading comes in, and that's where losses come in as well. So it is always best to go with those big market makers. As far as the NASDAQ goes, similar story. Everything important really happened after that FOMC. We did have several opportunities, especially right at the open of NASDAQ right here. It came up and hit that edge once, twice, 3 times before news. Winners for several students who took them, and then news at that 10 o'clock mark came out, and we got a 5th time, and it just kind of died out, like I said, until the FOMC, and like you can see there, it went nuts. But ultimately, they are finishing net positive again. New contract highs yet again in the equities. No way to tell if this is going to be a turn in the economy. I wouldn't base anything off of what the markets are doing in terms of how the economy is doing. I wouldn't do that. But all I can say is we are definitely finishing net positive for the day. Had a huge run up after that news announcement. No telling what tomorrow is going to bring. If they keep climbing in the overnight, we're most likely going to open gap up. It just depends. Again, though, if you guys have any questions or would like more information, feel free to reach out to us. We are Target Trading Academy. You can find us on Facebook or go to our website at targettrading.co. Again, it is targettrading.co. Get in touch with a representative at either location. They'll gladly show you what we do in our rooms each and every day, and you'll be able to see for yourself why we are the #1 trading education company in the world. Look forward to seeing you there.